Hey guys, welcome back. We're gonna do another Sunday night show where I go over some earnings to watch this week, as well as some other things I'm looking at in the market to help you make some money this week. Anyway, we're not gonna do a drinking in the dark video. I have a little bit of a sore throat. I think I'm a little bit under the weather. So we're drinking some Polar Seltzer today, and I wanna talk about some trades that you can make. Now, real quick, I just want to recap. Last week, I talked about a very key trade, which is trading overall SPY and S&P futures, because they're going to be super volatile. We see this a lot of the times when we have 20 to 30 point swings in the after hours market, that a lot of times when you have that kind of volatility where people are buying and selling and S&P futures move that much, you have a chance for the market to drop. Now, and that's essentially what happened Monday, Tuesday. We had pretty negative action happening with days where it looked like there was no bid coming in. For that reason, we had a huge sell-off a few days, but the market did buy itself back. Well, speculators started to buy into the market, and I wouldn't call it so much as straight up speculation. One of the biggest pieces of advice I could give a lot of people if they're trying to time the market or trying to time the market short, other than don't, is basically if you're going to short the market, usually the last few days of the month and the first and the second day of the upcoming month, maybe wind down your short positions. What ends up happening is a lot of major funds are constantly repositioning, especially end of September. It's an end of a quarter for a lot of financial institutions. So what happens is people start repositioning their bets, maybe putting more money into the market as more money comes into the hands of these pension funds and mutual funds. So what ends up happening is you do have some underlying buying pressure the last few days of the month and the first few days of the month. So I rarely see the market down on the first day of the month, rarely. So if there's one piece of advice, maybe the last day of the month and the first day of the month, if you have short positions, take them off or reduce them to deal with the speculation or just the sheer buying that occurs on those days. Anyway, the market didn't actually close the week that poorly because of the fact that the first day of the month, October 1st, we did see a lot of buying and repositioning into the market. So always keep that in mind when you're shorting. Anyway, just wanted to talk about that. I think we're gonna see upcoming volatility as well with infrastructure bill. So yeah, we could see some continuation of volatility with the $3.5 trillion infrastructure bill on the line. That's going to add some volatility, trying to figure out how the markets are going to reposition. The algos might go crazy on the federal deficit that we're running and the arguments that are going on, maybe shutting down Congress, shutting down the government. I'm not reading too much into that for the overall market. And of course, Jerome Powell saying there is no inflation. So I don't know what's gonna actually happen, but there's a lot of potential big catalysts for the overall market to add volatility. So we're gonna see. We're gonna see this week what's gonna happen, because last week there was some buying pressure towards the end of the week. As I mentioned, mutual funds, hedge funds, pension funds all have to reposition their cash or deploy new cash that they've been receiving. So we're gonna see if the bid holds up this week. For me, I took short positions off and then I might be re-adding them again this week on the S&P. I'm only shorting S&P. I'm scared to death of getting squeezed out of a lot of names with the meme stock squeezing. That's the last thing I need. So only shorting S&P if I do decide to short the market, and obviously weaving in and out. Anyway, that's all I wanted to say about the overall market. Watch the overall volatility. The big earnings this week, the only one I'm watching. It's estimated, we don't know the exact time yet, believe it or not. Tilray is going to give its earnings announcement Wednesday or Thursday. I think it's happening Wednesday, but That's the big one I'm watching. And I want to talk a little bit about Tilray because I've actually been bag holding this name for a long time. I think my overall cost basis is around $18, $19 a share. So Frugal Tiger has been getting punched in the face, still looks nice and beautiful. The point I'm trying to make is Tilray is the big earnings to watch this week. There's going to be a lot of added volatility. For a lot of people who aren't in the marijuana space, I'm not really a big player on marijuana. I do have about 7,000 shares of Tilray, which is a lot. Having said that, there are two things I want to point out. I barely bought into the dip of Tilray. When Tilray started crashing from 20 to 11, the fundamentals just looked weak and it just kept going down and down and down. I bought a little bit around 13 thinking it was a dip buy, but I'm not really adding much into $11 a share. And one of the reasons I'm pointing this out is a lot of times when technicals break, they can stay broken for a very long time. You don't want to keep deploying cash hoping it will bounce. The bounce might come, but it might be 3-4 years from now. My general take right now on Tilray is I think $11 a share is actually not the worst time to buy. The risk-reward ratios do favor potentially that Tilray could bounce from here, but we don't know when. So I'm not saying deploy insane amounts of capital onto Tilray, but let's say you have a bankroll of $10,000 and your trading it costs you nothing to trade, nothing to buy Tilray, no commissions that you pay to your brokers, etc. Maybe consider buying in for like $200 or something really small, maybe. And obviously do your own due diligence. But the reason I'm saying this is Tilray is a name that has the potential to squeeze. We've seen it squeeze before. It has a lot of short interest, has the potential to squeeze. Even the fundamentals aren't that bad. You have overall valuation about $5.1 billion-ish at $11 a share. Obviously, this changes daily based on the price of Tilray. A lot of volatility and a lot of speculation in this name. Of all the marijuana names, Tilray has the most amount of speculation. So even fundamentally, it's 5.1 billion. It's not that expensive of a company at 5.1 billion, a potentially very large market to grow, potential legalization through Congress federally, which would really help the overall marijuana industry. And its revenue is about 210 million, which might seem small, but there's a lot of room to grow. And we've seen it's acquired Afria. It's gonna continue to potentially acquire its competitors. So it's got a lot of good things potentially going for it. It's also a high risk name. It could actually drop even further from $11 a share. And technicals are not necessarily supporting a bounce right now. So the key thing I'm looking for on this earnings call is whether they're able to grow their revenue. They're still burning cash, about 25 million a quarter. I think 2 quarters ago they burned 55 million that quarter, and it really affected the stock price negatively. But the key thing I am trying to watch is just because they're burning cash, lighting it on fire, it doesn't really mean much as long as they can grow. Is the revenue gonna grow? That's what I'm watching this earnings calendar. Fingers crossed here, because it just sucks to be holding a name where you're down so much. I think $70,000 on Tilray. I think in the long run, the risk reward ratios, potential legalization of marijuana, potentially acquiring other industries, and the fact that there's a lot of speculation on the name kind of justify a potential buy here, with the thought that in the long run you can make a good return on your money. Not maybe the best day trade or swing trade, but a long run trade. The one other last thing I want to point out is, once again, speculation. Speculation is a very important thing in terms of stock trading. There's a lot of reasons why Tesla actually became successful. And one of the key ones, other than the fact they make cool cars, Elon Musk is a great CEO, is people just like to buy the stock. People like to buy Tesla. They want to support Tesla. They want to support Elon Musk. And of all the marijuana names, the reason I'm a little bit more biased towards Tilray, I don't know why the reason for the speculation is there, but speculation is there. Of all the marijuana names, this is the one that seems to draw the most amount of public interest, most amount of talks in the forums and things like that. So that's why I watched Tilray. Not saying for you guys to buy it, do your own due diligence, but marijuana might be hot in a few years. Now, if you don't want to trade Tilray, one other stock or ticker I recommend is MSOS. It's a marijuana-based ETF. You can potentially make the play on overall marijuana space with the potential legalization in the upcoming years. And that way you can stay a little bit diversified. I'm not the best stock picker in the world, as many of you guys know. So that's more or less it. I rambled a little bit too much about Tilray, but that's slim pickings once again for earnings calendar. Anyway, I want to talk about a few other things this week. Other names I'm watching a few other names. I'm watching Lucid Motors, ticker symbol LCID. Now, the actual true technical breakout point for me, where I'd be really interested in the stock, is it's got to break above 30. We're very far away from that. But I would keep an eye on it on an intraday basis. There seems to be some speculation coming in, but it's at a resistance point right now around 24. I don't think I'd be willing to buy it for a swing trade right now based on its current price, but as a day trade, there is some action coming into the name right now. So watch Lucid, not really buying it till it breaks above $30 a share, because once again, it's the same concept of Tilray, where there are certain key points where it needs to break above before a lot of speculative money comes in. And if you're buying it now, you could be holding it for a long time. So don't buy it for the purpose of a long-term buy right now until you see some serious speculative money coming in. Which brings me to my next point. Palantir, one of my largest trades ever, and my largest position by far in my portfolio. I actually got dumped on this week. Lost 16% of its value on Palantir. So Palantir kind of shit the bed, and I hate to admit it, I honestly did expect this time I was going to break above 29. I am a bit biased, full disclosure, because of my massive position in it, so I don't recommend everyone go jumping into Palantir at this point in time. I think the long term Palantir is going to do great. Problem is, in the short term, the technicals do not support it. It has tried to break above 29 2 times and it's failed. Technically speaking, this is kind of a big deal. This is what they call a double top pattern in the market, where it tries the first time for $29. It failed a few months back. It's trying again for 29, and this time not only did it fail at 29, it failed at another key support point, which was $26 a share, breaking down to 24. And I'm ashamed to admit it, I thought it was breaking out and I bought more into 27. So I kept saying that I was gonna reduce my overall exposure to Palantir. I ended up buying the dip and I fucked up. So that's all I have to say about that. My biggest piece of advice for people, if you do decide to buy this dip, I'm not saying buy the dip. If you do decide to buy the dip, there are 2 key points of resistance, $26 a share and $29 a share. I am done buying this name myself because I own so much of it now until it breaks above 29. No, I'm sorry. It's failed twice around 29.20, 29.50. Seems like a lot of selling comes into place. So I'm done buying this name until it breaks above 30. And one of the reasons I feel like there's a lot of selling pressure when we get that high, 29, is because a lot of insiders got rich on Palantir just through the IPO process. Palantir was built over 7-8 years before an IPO. And when the company, I mean, its valuation is 50 billion. So a lot of the insiders have already gotten rich. So they're taking time. When they see the stock at a certain price, they're deciding to offload it. So that's causing some selling pressure onto the market, and that forces potentially retail investors or institutions to buy at those prices in order to keep the price that high. So keep that in mind. It could take some time to play this one out. But I have some faith here. Which brings me to my next potential trade to watch. Once again, there are no earnings, so I'm talking about overall trades here. Snowflake. You guys recall I was trading Snowflake a while back. It's been off my radar. I've been so busy trading all sorts of other names, but Snowflake is one that I used to trade a little bit more frequently, a very volatile name. It can just move. Now, Warren Buffett actually bought a lot of the name around $250. It's around 303. So this is a Berkshire Hathaway play as well. I think it ran to 320. It dropped lower. It seems to be holding above 300 now. If it continues to hold, maybe take it as a swing trade. Maybe just do a day trade on the long side. Just watch the overall tape on Snowflake, but Snowflake might be breaking out. Moderna is selling off aggressively. Let's see how Moderna plays out. I think people are concerned that maybe they're not really making any money off the vaccine after all. So let's watch the tape on this. It's going to be a very volatile, action-filled tape. So Moderna is at $341 a share, so it's dropped a lot. The question is, do you buy this dip or do you continue to short this name? Right now, I would say it's kind of in free fall territory, so just be careful whatever way you take it. It's kind of where I would call an inflection point where it could go either way. So be careful, watch the tape, but I think this is one you should keep on your radar because it'll make a great trade. And lastly, what is that, Del Taco? No, it's not Del Taco, it's Dollar Tree. DLTR, so watch that. That's a new one I haven't really mentioned. They had a huge spike up on Friday. It was at $120 a few months back, but right now it's trading at $98. Potentially buy this if it breaks above 100. Keep it as a trade though, because a lot of times we see a spike up on earnings followed by an immediate sell-off of people who've been potentially stuck in the name at a lower price, just wanting to get out. Yeah, that is actually more or less it for me. I had a bad trading week this past week, as I mentioned, because I just hold so much Palantir that sometimes some of my day trades that make between, anywhere from 800 to, 3,000-4,000 can't offset my massive losses in Palantir. And Plug is another one that I thought was potentially going to break out around 29, and it sold off and sold below its resistance, below its support. So it seems like it found some support now. We'll see if it bounces. Oh, one more thing, Tesla's actually holding really strong right now. If you pull up the chart, it just has a slow grinding kind of move right now, 770. It's around 880. If it breaks above that, it's a long way from there. Potentially buy it, but keep in mind a lot of big names are also short selling it. Right now, it has a very slow, grindy kind of trade to it, and a grindy trade up. Despite all the market volatility, Tesla seems to be shrugging everything off. Anyway, I'm sure there are names that I potentially missed, but these are the ones that I would really be watching for this upcoming week. I want to make one thing clear. I actually am not recommending to keep Palantir on the watch list this week. I keep mentioning it because it's my largest trade, but that doesn't mean you guys should be trading it. It honestly, I'm not really sure if you should be buying the dip here, because, like I said about Tilray, it never caught that bounce, and it could be stuck at that low price for a long time. Palantir has resistance at the 26 level, and Palantir has resistance at the 29 level. It fell below both levels this week, just like, so I don't know. If you do buy the dip, maybe offload it at 26, see if it breaks above 26, and then if you do, and if it does, maybe buy it again, hold it to 29, and if it does break above that, then figure out what to do from there. Anyway, that's it for me. I have rambled way too much this week. I appreciate you guys staying tuned, and we'll trade again next week. I'll see you soon. Bye. I just want the money, 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 money.